Welcome back to the GMS Weekly Podcast, your trusted voice in ship recycling. I'm Ingrid.
And I'm Henning. Week 47 of 2025 is here, and if there's one phrase that captures the mood, it's forums and frictions all across the market.
Frictions is right. It's been a rough week for almost every key indicator we track. Oil slid again, down to around $57.7 a barrel, more than 6% lower than a month ago, and roughly 16% below where we were this time last year.
Freight, on the other hand, is still climbing on the week. But if you zoom out 30 days or compare to late 2024, the Baltic Dry is well off last year's highs. So trading markets are active, but we're nowhere near the levels recyclers would like to see feeding their yards.
At the same time, regulators are tightening the screws. In Washington and Brussels, sanctions and blacklists just keep coming. The EU is working on its 20th sanctions package against Russia, talking about letting member state navies board suspected shadow fleet vessels and pushing flag states to deregister them.
On the Iran side, the U.S. sanctions net now wraps roughly 170 ships. Put that together with the broader dark fleet issue, more than 900 vessels with no clear end-of-life strategy, and you've got a major structural challenge building for ship recycling.
All of that is filtering straight down to the beaches. Supply still being squeezed, steel plate prices fell again in Bangladesh and Pakistan, and both the taka and especially the Indian rupee took a late Thanksgiving beating.
Which might help explain why the bidding tables were relatively quiet. A lot of the industry's attention was actually in Hong Kong, where owners, cash buyers, insurers, yards, and lawyers gathered for the TradeWinds Ship Recycling Forum to debate future supply, HKC implementation, and what to do about all that dark tonnage.
Unlike the old days when deals were done on the conference floor, this year's forum felt more muted. Fewer candidates in play, softer pricing, and a lot more caution. Still, there's a shared hope that as more ships pass 30 years of age, 2026 could finally bring a busier recycling cycle.
That's the big picture backdrop. Let's head to the beaches and see how week 47 is playing out.
Starting with Bangladesh, which remains 20 up and still on top of the demo price tables. Indicative numbers are hovering around $410 per LDT for dry bulk, $430 for tankers, and about $440 for containers. So Chattogram is still leading the subcontinent on price.
But it hasn't felt like a leader's market. 2025 has been almost anorexic on tonnage. Inflation has bounced between 8 and 9%. The taka keeps weakening, now around 122.5 to the dollar. And local steel plate prices slipped again, sitting just under $526 a ton.
Yards are sitting on piles of unsold recycled steel, trying to place material domestically even at break-even levels, while cheaper imported scrap keeps taking the spotlight. Layer on rising political tension ahead of the February 2026 elections and sporadic street violence, and day-to-day business in Chattogram is anything but straightforward.
There is a brighter side, though. Another yard crossed the finish line on HKC compliance this week, bringing Bangladesh to roughly 20 approved yards, with more expected by year-end. And GMS's own Sustainable Ship and Offshore Recycling Program, SSORP, has been busy on the ground, delivering hundreds of safety and environmental training sessions to more than 1,500 workers across India, Bangladesh, and Pakistan.
So even if 2025 ends much like 2024, thin on tonnage and under pressure on prices, Bangladesh will close the year wearing a stronger HKC metal than ever.
Over in India, the story is losing bigly. Along failed to secure any meaningful tonnage this week as recyclers largely sat on their hands. The rupee took a sharp hit, dropping more than 1% in just 5 days to around 89.6 to the dollar, edging uncomfortably close to that psychological 90 mark.
Steel plate prices finally nudged higher, up to just under $398 a ton, but they're still below the 400 line. That means smaller or less preferred ships are pricing well under $400 per LDT, even though nominal demo indications sit around $380 on bulkers, $400 on tankers, and $410 on containers.
With the currency sliding, most end buyers are worried that today's numbers won't hold by the time a vessel actually arrives for cutting. Macro-wise, India is drifting toward a sort of stagflation, with inflation dropping far below the government's comfort zone while growth jitters remain in the background.
That's true, Henning. At the same time, cheaper dark fleet tonnage and imported steel are distorting the market and creating a two-tier pricing environment that has end buyers on edge. Alang's port position tells the tale. After a small burst of recent deliveries, it's almost bare again, down to just one vessel at anchor and no fresh fixtures on the books.
And as Bangladesh and Pakistan ramp up their own HKC-approved yards, India's long-held compliance advantage is slowly eroding. It's a worrying sign for recyclers who've relied on that edge for years.
Pakistan, meanwhile, is in the middle of a long-overdue makeover. The big headline this week is that Gidani's first HKC-compliant yard is expected to receive formal approval very soon, with another 2 to 3 yards targeted over the next few months and more upgrades planned into mid-next year.
It's landmark news for a market that briefly led regional price rankings in the summer, but then slipped behind once the convention came into force in June. Official demo indications are still around 400 per LDT on dry bulk, 420 on tankers, and 430 on containers, but short-term, it may not be enough to divert much tonnage.
Fundamentals remain soft. Cheap Iranian imports continue to cut into demand and drag domestic steel plate prices sharply lower again, now around $586 a ton, even though that's still the highest level in the subcontinent. The Pakistani rupee did stage a small comeback, firming a touch to about 282.5 to the dollar.
But we're now into the third straight week without meaningful new arrivals, aside from a small straggler that finally beached after more than a month at anchor. Most Gidani buyers are simply watching India and waiting for some stability before they start bidding again.
With freight markets still rewarding trading over recycling, it's hard to see Pakistan's waterfront looking much different from Alang's through December. Lots of talk, not many landings.
And Ingrid, then we have Turkey, where the update is, quite literally, nothing new. Aliaga remains steady but subdued, with demo levels still sitting in the 260s to high 270s per LDT across the main ship types.
The lira slipped again, past 42.4 to the dollar. Steel plate prices are flat, and demand is being smothered by a lack of suitable supply. On paper, prices are holding in the mid-200s per LDT range, but there's very little real action behind the numbers.
So to sum it up, week 47 really does live up to forums and frictions. Tougher currencies, softer plates, and restricted supply on one side. And on the other, real progress on HKC compliance in Bangladesh and Pakistan, and a busy conference circuit trying to map out how the industry handles the growing dark fleet backlog.
The near term still feels tight, but the groundwork for a more compliant, better regulated recycling market is slowly being laid, just in time for what could be a very active crop of end-of-life ships in 2026.
And that wraps your overview of the GMS Weekly Podcast, week 47.
For full analysis, charts, and detailed port data, check out the complete GMS Weekly Report on the GMS mobile app and subscribe to the podcast on Spotify, Apple Podcasts, Amazon Music, and YouTube Music.
Until next time, stay sharp, stay safe,
and stay anchored with GMS, the world's largest buyer of ships and offshore assets for recycling.